Let's get into money matters. Gold and silver hit record prices in late January, then prices slipped back a little. Then they rallied again. What should you make of it? And is it time to jump on the bandwagon? Here to discuss that and a bit of Bitcoin too is personal finance whiz Mary Holm. Hi, Mary.
Hi, Jesse.
Good to see you.
Thank you. You too.
How have you felt? Is your view on gold changed over the years?
Probably not really.
Yeah.
Yeah, I mean, lately people have been saying to me, friends and that, do you think I should get into gold? And I've always said, well, if you want to, just a little bit, but long term. But and last week, your producer, Sophie, said there's people around RNZ asking about gold, so why don't we look at that? And I said, okay, cool. And then since then, gold's had some pretty big drops.
Yeah.
It went down 10% in a day and 18% altogether. But then I noticed that silver's gone down quite a lot further and Bitcoin has gone down 43% in recent times. So they're all as wobbly as anything. And, it reminded me of the story about the shoe shine boy that we've talked about before on Wall Street. Actually, 1929 was the share market crash, of course, which is we're just coming up 100 years on that, which is interesting. Yeah. But I think it's the biggest share market crash ever. But Joseph Kennedy was apparently walking down Wall Street earlier that year, and he got a shoe shine by a shoe shine boy, and the shoe shine boy was giving him stock tips. And he thought, if the shoe shine boy is investing in shares, it means everybody's investing in shares. I've got to get out. Yeah. And it kind of felt that way a little bit to me with gold and silver lately, that, lots and lots of people are talking about it, and you think, maybe it's getting a bit top heavy. And in the last few days, the markets would suggest that. What prompted it actually was Trump appointing Kevin Warsh as the new chair of the Federal Reserve.
Gosh, I totally missed that news. I've obviously been in a cave, yeah.
Well, I don't think you and probably the vast majority of listeners, but the point about it is that people have been getting into gold, silver, Bitcoin, etc., because they've been worried about the state of the world economies, and so on. And meanwhile, in America, Trump's deciding who to appoint to run the Federal Reserve, and he's chosen someone that the markets think might be quite good. Let's just say that. And therefore, nerves have calmed about how bad things are in the worlds of finance. And that has meant that people who've got into gold, silver, Bitcoin, etc., which tend to be investments people get into when they're worried about the market. And when the new Federal Reserve Chair is looking like actually quite a good choice, the markets are kind of settling down now, and people are saying, we don't really need gold and silver and Bitcoin, we're going to get out of it. Yeah. So we've seen, some big drops in those prices in recent times. Longer term too, gold went down more than 50% in the early 1980s. I was looking back at the history. So more than halved. And there have been other periods when it went down quite a lot too. So it's, you've got to, we don't know what's going to happen.
It's funny, when you look at the graph at the moment, you just see it going, apart from the last couple of days.
Yes.
I've got this graph here for the last 20 years.
Yes.
You just see it going up and up and up, and your brain kind of thinks, it's on the up.
Yes.
You can't really kind of visualise it just falling away.
Suddenly
again.
Flipping. Yeah. No. It's but these things do happen. Well, then they are happening. Now, I'm not saying I know, because I never do know what's going to happen next. It might just be a little downward blip and on upward it goes, but it might not. So my main point really is, if you get into an investment like gold or silver or Bitcoin, it's got to be long-term, and it's got to be so that if there are blips like this, you don't freak out and sell during a downturn. The other long-term investment that I always advocate is New Zealand and world shares, in particular, world shares, share funds, if you like. And when you look at compare those investments with gold, it's really interesting. In recent years, in the last couple of years, gold's done much better. But if you go back over longer periods, like 15 years, shares have done better. And when you look over 200 years, which Deutsche Bank, the German huge big bank, a financial institution, looked at returns after adjusting for inflation over 200 years. And global shares, world shares, went up about 5% a year, and gold went up 0.4% a year. So way worse. So it's 5% for shares, 0.4% for gold. So it's had way lower returns over the long term.
And you've explained the maths to me before. Really, share markets have to go up over the long term.
Yeah, they do really. The broad market, not individual shares, if a company's doing badly, but the market as a whole, because most companies grow, or most companies big enough to go into the share market grow. And what's more, if you're reinvesting the dividends, you're getting dividends on shares. And so, whereas gold just sits there and does nothing. Is there time to just read you a quick quote from Warren Buffett, or do you want to read it out? Have you got it in front of you?
Sure.
Yeah.
Here's Warren Buffett, famous US investor.
Yes.
It is an entirely different game to buy a lump of something and hope that somebody else pays you more for that lump 2 years from now than it is to buy something that you expect to produce income for you over time. If you own 1 ounce of gold for an eternity, you will still own 1 ounce at its end.
Yeah, Buffett's always he's not a fan of investing in gold. He says, shares, most of them are in companies that are growing. You've got the dividends coming in. Gold is just a hunk of metal, albeit a hunk that's very much prized in many. The biggest use of it, actually, I was having a look, is jewellery, but there's also a whole lot of uses, other industrial uses and so on. And when you get to silver, it's interesting. There's a lot of high-tech uses for silver, apparently in solar panels and things like that.
Yeah.
They got silver in them.
Mobile phones and things.
Yes, yeah. But they're all right. My bottom line on it all really is, go for it if you want to. A bit of silver, a bit of gold, a bit of Bitcoin, or any of the above. But I would recommend you don't put more than about 5% of your investments in there, and you've got to stick through thick and thin. They're long-term investments. They're not. If you want to play with a little bit of your money, 1% of your money, play with it. Get in and get out again. But it's not a great idea long term. One other final point is, if you want to get into gold, an easy way to do it would be to go into an exchange-traded fund, a gold fund. So they invest in shares that are gold companies, basically. And so that's a nice sort of easier way to get in, and you can get out little by little. You can put $100 in and take out $10 worth and another $20.
Rather than buying actual gold.
Yeah, well, with actual gold, you've got to store it. Yeah. And which is, I had that issue in my column recently, where do you store it? People say, well, you bury it in the garden and then, but then you might die and no one knows where it is, and etc. Yes.
Great session, Mary.
Yes.
Thank you.
Thanks, Jesse.
Mary Holm, our personal finance expert.